According to Goldman Sachs Group and Deutsche Bank, the recent pullback in U.S. stocks could be close to an end if history is a guide. Goldman strategists recently stated that despite the sharp sell off in the past week, we remain optimistic about the path of the U.S. equity market in coming months. The strategists additionally stated that since the financial crisis, the typical S&P 500 pullback of 5% or more has lasted for 20 days and extended by 7% from peak to trough, matching the magnitude of the most recent pullback, if not the speed. But according to Prudential Financial Chief Market Strategist Quincy Crosby, the market could be heading for a good old-fashioned washout. According to Crosby, the message from the latest bout of the market weakness is clear. Brace yourself. A warranted plunge that shakes out the froth in the stocks could be nearing before September ends. Crosby went on to say that unwinding will probably continue and ultimately we will get to a washout. We'll get to oversold conditions and there will be kind of an all clear. In terms of the calendar, this is a dicey period for the market. We have about 3 more weeks of it in terms of statistical difficulty in the markets. Consolidation is not fun, but the point is that as the markets become increasingly oversold, you're going to see buyers coming in and taking their positions and taking them to the year end. So, is it all clear? Or is there going to be a washout? And will investors be hung out to dry? Well, let's take a look. So we've been presented with 2 different scenarios of where the market may head. Goldman thinks that perhaps things are all clear. And in the latter theory, we're heading toward a washout. Now, I don't necessarily subscribe to either scenario. So let's go see what I'm looking at. Now, we're looking at the 2-year weekly on the VIX, and the symbol is $VIX. And we talked about this a little bit last week, and we've also talked about this a number of times over the last few months. Here's where we are. We've based and bottomed here above that 20 level, and we had a little bit of an eruption the last couple of weeks. This week, we're starting to head back up in the market, which means that the VIX is starting to subside. Again, the VIX is basically the opposite of the market. When the VIX heads down, the market heads up. And I think that's what's going to be happening here, at least in the near term, is that I think that the VIX is going to calm down, head back down here toward the low 20 level, and hopefully it starts to base and bottom there again in, say, the 22, 23 range, somewhere around that area. You can see here in the MAC, the fast line was down here. It moved on up with the latest eruption, but it didn't cross through the slow line, and it's getting reflected back. So the fast line is going to get reflected back down here, and then hopefully it's going to start moving sideways, consolidate, and then maybe try another attempt at moving up through the slow line and having another eruption. So that's what I'm looking for. Now, is that going to lead to a washout? Not necessarily. It could be a pullback. It could be a correction of some kind, and that's what I'm watching out for. So I'm just being cautious. So once again, we've topped out here in the upper 30s on the price chart, and we're coming on down. I expect it to move on down here and consolidate in the low 20 area. So now let's go take a look at our charts and see what's happening with the S&P. And now we're looking at the spiders, the SPY, and a matchup with the VIX chart we just looked at. We're also looking at the 2-year weekly on the SPY. So, as we just discussed, the VIX is calming down, heading on down, which means that the stock market indices, such as the S&P, can also base and then head back on up. With the VIX calming down, the markets head up. So we're going to watch to see if we create a double top here. I'm not sure exactly how long that's going to take. It could take several weeks, but we'll have to watch that. So once again, the VIX is the opposite of the S&P and the other indices. The VIX calms down, the markets can head on up. Now, let's look at the MAC. Here, the MAC is somewhat similar, the opposite of the VIX MAC. And the fast line on the VIX is below the slow line. So the fast line on the S&P is above the slow line. And it's coming down here, and it should get reflected on up, such as that. I would expect the slow line to continue this way, start leveling off, maybe a topping process heading on like that. Now, what happens is, if I'm correct, the VIX will start calming down, but it'll start basing again in the low 20s, which means the topping process in the market should occur like this, and then ultimately it'll fail and head on down. And if I'm right, then the fast line on the VIX will base and then head up and have another eruption. Moving on down here, you can see the topping process going on. We'll have perhaps a little bit of reflection back on up here, and then see if it tops again and heads on down. Here into the price rate of change, you can see that the fast line already came through the slow line, which means that this is going to have to come up from below and head on up here. So is it going to head up and move through? Possibly. Or is it going to get reflected back? There's a possibility of that as well. Relative strength index, you can already see that things are weakening going way back several months. Now, the here is going to have to move way up into that overbought territory to move up and through that trend line. We want to watch to see how far this comes up and if it gets reflected back down. If it gets reflected back down, then we could have a bit of a downtrend or a correction in the market. Again, stochastics, fast line is below the slow line. It's not good for that to happen and have a move on up, because oftentimes they can fail, such as it did here. Now, other times it can move up and back through, but I'm looking for a failure based on all the weakness in some of these other oscillators. So that's the scenario that I'm working off. It may not turn out, but that's the problem with the markets that I see, the weakness that's occurring. This kind of situation, again, we had a top and we had another attempt, but then it failed. So we have a top. See if this comes on up here, and if it does fail and head back down. Are we going to have another correction or a downtrend? Again, I don't think we're going to have a washout, but that may occur, and so we're going to have to keep our eyes peeled for that. So back to the price chart one more time. We're going to look for that double top here and here. We're going to look for that VIX basing and perhaps moving up through for another eruption, which means that the markets would head down. So that's the scenario I'm working off right now. So stick with me and we'll follow this as it evolves. And for today, that's ChewDog Charts. Thank you.